So, in this video, you'll learn, right, trendline trading strategies and techniques that you can use to profit in the financial markets. So one thing about trendline is it's universal, right? It can be applied whether you're a day trader, a swing trader, a position trader, or whether you trade stocks, forex, or futures. It doesn't matter because trendline, it's a universal concept, right? And you can apply it across the different trading methodology and different financial markets. So with such a universal technique, right, let me share with you the first thing that you must know. How not to draw trend lines, right? You might laugh, right? This is like somewhat a joke, right? But trust me, I have seen many traders who draw trend lines in such a manner. And the problem with this approach is that if you have too many lines on your chart, which line do you trade, right? You want to go long over here, but shortly below, there's another trend line that could possibly, offer a better trading opportunity. So, you have analysis paralysis. You want to buy? At the same time, there's another trend line that shows even a better buying opportunity. Or if you want to buy, shortly there's another trend line that is coming in acting as resistance. So there's going to be a lot of problems when you have too many trend lines on your chart. Okay, so how we should go about it is, let me share with you my 3-step technique to draw trend lines. And once you've mastered this, right, you realize that your trend line can start to predict, right, market turning points with, improved accuracy. The first thing is, number one, zoom out your charts. Okay, let's say you're trading off the daily time frame. Zoom out your charts on the daily time frame. That's the first thing. I typically have about 200 candles on my chart. Number two, draw the most obvious levels. Right, as you've seen earlier, the earlier example, this person, right, actually it isn't really a person. I made this up, right? But this clearly is a problem because you're drawing all the minor, major, and intermediate levels, and this, it's analysis paralysis for you. So what you want to do is to draw only the most obvious levels. Don't worry about missing out, the fear of missing out opportunities. There is always more than enough opportunities, right, in the financial market. So stick to the most obvious levels only. And the third thing is you want to adjust it, right, to get the most touches on your trend line. Okay, so let me, share with you a few examples on what I mean by this. So you can see over here. Okay, so we'll just zoom out a little, right? So what I'll do is that this is a trading view platform, and usually when I draw my levels, trend line, support, resistance, whatever, I like to reset the chart first, okay? And as I've said earlier, right, zoom out your charts and try to get as many, I won't say as many candles, but try to keep the number of candles on your chart consistent. So usually I would, use the mouse scroll and, push it 5 times to get a zoom out picture. So for example, okay, 1, 2, 3, 4, 5. Okay, so usually I'm on a daily time frame. So you can see over here. Okay, so let me do it once again. I reset the chart and I scroll down my mouse usually 5 times to get enough candles to see the big picture. 1, 2, 3, 4, 5. So how many candles is this, right? Let me find out. I think there's a tool for this. Measure, right? Let me just click this one. Over down to here. There is about... Okay, so there's about 471 bars over here. Okay, so So there's about 400 candles, 470 candles on my chart over here. Okay, so usually this is what I do. So I made a mistake earlier. I said 200 candles, right? But as I've seen now earlier, it's about 400 candles on my chart. Okay, so now that I have about 400 candles on my chart, I want to start. I've already done the first step, which is zoom out. Second step, draw the most obvious level. So which is the most obvious levels on my chart? So let me just start to identify the levels. I see one over here. Okay, I'll draw it first, right? I'm not going to do anything special. I'll just draw it first. Okay, I see another one here. So now you can see that this is starting to look somewhat like a trend channel. Okay, since there is possibly another one here, but really it's in the past, so I'm not going to concern myself too much about it. Similarly for this, you can draw another trend, a trend line somewhere around here, or even around here. But really, I'm not going to do it because the price action is so far away and it has already happened. It's unlikely that the market is going to retest back this level. Okay, so I'm just going to remove it to declutter my chart and just focus on the now. Focus on the price action happening right now. So as you can see here, right, I have pretty much plotted out 2 trend line. It's otherwise known as a trend channel. I'll remove this first. So the second thing I've identified the most obvious level. So this one over here, this trend line is the most obvious. So I'm going to adjust this and get as many touches as possible. So what do I mean by this is that, so one way you can do about it is that a lot of traders, they'll just draw, trend line and draw it and put it at the extreme, right? Something like this. Okay. So if you do this, right, at the extreme, right, you would see that your trend line is not going to take into consideration the price action over here. Let me just get my tool out. Your trend line is not going to take into account the price action over here, this portion over here. So what I mean by adjust it to get as many touches as possible is that I want to adjust my trend line so it touch as many points, or rather as many swing significant points on the chart as much as possible. So if you think about this, right, what I'm going to do is I'm going to adjust this lower somewhat to about here. So at this point you can see, right, I have gotten so many more touches. Initially I only had 2, 1, and this point 2. But right now I've adjusted in such a way whereby I got 1 touch, 2, 3, although this one broke a little bit, 4, 5, 6, 7. So I don't care whether it's going to touch the wick, whether it's going to touch the body. All I want is that it hits the any part of the candle as long as it gives me 1 touch. So this is how I draw my trend line. Okay, so similarly, right, we notice there's a bottom one here. Just Control C and Control V, you can get another one out. Okay, and you adjust it. And again, same story, try to get as many touches as possible. So again, traders might draw this one and get 2 touch only. But what I like to do is to get more touches, so I'll adjust it down lower. Okay, and you can see that I got 1 touch, 2, 3, 4, 5. About 5 over here. So this is how I would draw my trend line using this 3-step technique. Alright, so let me share with you another example. Let's have a look at silver. I think it's XAG USD. Okay. So looking at silver, again, same thing, right? Let's repeat the 3-step technique. Number 1, zoom out, right? So I typically have about 470 candles, as you've seen earlier. I move my mouse scroll 5 times lower. 1, 2, 3, 4, 5. Okay. So now, second step, highlight the most obvious level. So from what I'm seeing over here, this is the obvious level. Okay, I'm going to adjust it later, right? So let me just plot out the obvious level that I'm seeing right now. Okay, and I can draw some support, resistance, but we're just going to stick to trend lines for now. So now the third thing, adjust your levels to get as many touches as possible. And in fact, if you noticed earlier, the way I draw it, I already got most of the touches because that has been my habit. Right, so I'll adjust this lower. 1 touch, 2, 3, 4, and 5. Okay, so for this lower portion, right, I'm going to adjust this as well. So you can see that over here, I don't have, if I were to start from this point, right, I only get the most 1 touch, 2, 3, and 4. Let's see if I, put it down lower somewhere about here. How does that fare? Okay, so somewhere here, I got 1, 2, 3, 4, 5, and 6. So yep, this will be a much better adjustment for me. Okay, so this is how I would draw this trend line, and I also noticed that it can be drawn as a trend channel. Let me just Control C, Control V. Right, adjust it slightly lower, get most number of touches. Right, which will be somewhere. Okay, so you can see that if I were to put here, right, this portion here will be invalidated by a lot. So I would rather take into consider the recent price action and have this point 1, 2, and 3. And somewhat 4. Okay, so this is how I would draw the lower portion of my trend line. Okay, so if I just reset the chart, right, you can see that right now this is the price action of the markets and the way I draw my trend lines on it. Okay, so this is how I go about drawing my trend lines, just having the most obvious level. Number 1, zoom out your charts, draw the most obvious levels, and the third thing, adjust it to get as many touches as possible. So these are 2 examples to get you started. One thing to note, right, again, right, is that trend line, alright, it's an area. Although there's the word line over there, you don't want to, treat it as a, strict line in the sand, right? Black or white, no, right? It's an area. So what you can do, right, to kind of, treat it as such is that you can draw 2 parallel lines like this. Okay, so for example, you go back to the earlier example that we have done. Okay, what you can do is that, okay, I zoom out first again, right? So what I can do is, again, Control C, Control V, and treat this as an area. Okay, so now you can see that. Okay, you can even adjust it now slightly towards the extreme, right? And this area is to encompass as many touches as possible. So now you will treat this whole area as an area of resistance. So similarly for this one over here, this trend channel, you can do it, right? But you can see that this area here is really quite congested. If you add in another line, right, it might, just make things more complex than it needs to be. So if the area is wide, you can have 2 parallel lines to judge the area, but for this one over here, right, it's pretty tight, right? So to me, I can see it as an area. I don't really need 2 lines, but if you want to, right, make sure it's tighter, right? If not, right, it's going to be very congested, right? So something like this, all right, is sufficient. All right, so this is how you will go about drawing it as an area of on your chart, right? If you are, want to judge it as a zone. So that's what we have covered so far. Trend line as an area on your chart. So now you've learned how to draw trend lines correctly. So now how can you use this technique, right, to trade the financial market? So I'm going to share with you a few techniques that you can use, right, that hopefully, right, will help your trading. I believe it will. Okay. So first thing, right, is number one, trend line. It what kind of made a mistake over here, right? Trend line as a trend direction. I mean, like, it's a trend direction, but just let me make this slides accurate. All right. So trend line as a trend direction. So you can see that trend line tells you the direction of the trend. So you want, as much as possible, right, if you have drawn a trend line on your charts, trade in the direction of the trend line. So what I mean by this is that, as you can see over here, this trend line clearly is pointing higher. So you want to stay long. Look for buying opportunities. And if you think about this, why? Is because every time when you look to buy, you can see that the move that the market offers you, right, has a greater profit potential. If you think about this, right, or rather if you look at the charts, every time you want to buy, right, the up move is this portion here, this portion, this portion, this portion, this portion, and I would say somewhat this portion. Okay? But imagine if you are short, someone going against the trend. What is your profit potential? Right? If you think about this, it's just this portion, this portion, this portion, this portion, this portion. Clearly, right, the profit potential when you're short, when you're against the trend, is much smaller. So this is why I always say, if you want to look for high probability trading setups, you want to look for a favorable risk to reward trade with the trend, right? Usually you can see that the meat of the move, right, it's larger compared to, taking a counter trend trade. So a trend line, right, can help you, identify the right direction of the trend. So that's the first thing I want to share with you. Number two, the second technique is what I call a trend line bounce. So you know that trend line is an area on your chart where, you can identify, potential buying and selling pressure, just like support resistance, just that it's a diagonal this time around. So a trend line bounce is simply, right, looking to trade when the price is near the trend line. And here's how we can actually, find high probability, trend line bounce trades. So you can see over here, again, this is the trend line, right? Get as many touches as possible. 1, 2, 3, 4, and 5. Over here, right, you also have additional confluence. Now, you also have this previous resistance, right? Previous resistance acting as support. And the third thing you have is a bullish hammer, right? Just a lower price rejection before the price close higher. So now you have three factors going for you on this trade. Number one, price is at trend line. Number two, it's at previous support turn resistance. And number three, you have a bullish reversal candlestick pattern. So to me, this is a high probability trade. And whenever I see such a setup, right, I want to be trading this, right? But one thing to note is that you don't get this type of setup often, right? But when it does happen, really, right, pay attention to it and watch what happens. So this is what I call the trend line bounce, right? To me, it's a high probability trading setup. Here's another example, right? Same concept. This time around, it's a short trade, right? Downward trend line into this area of resistance, right? Swing low acting as resistance, And then you have this reversal candlestick pattern, a bearish engulfing pattern. And if you think about this, right, the take is that the market, the bulls, push price higher into this area of resistance, trend line plus resistance. Then the sellers took control, right, where they open here and finally pushing price closing much lower, right? This is why we get this bearish engulfing pattern. So you could just go short and have your stop loss, right, somewhere 180 or above this highs, expecting that, this market could continue lower. As I've also shared earlier, right, when you're trading in the direction of the trend line, the profit potential is larger, right? You can expect a bigger move downward since you're trading with the trend compared to, taking a counter trend trade. So this is the first technique / strategy that I want to share with you, the trend line bounce, all right, with the confluence of support resistance and some basic reversal candlestick patterns. Second technique, right, is what I call the trend line break. So if you look at this chart, right, this is what I call a healthy trend where you can see the obvious ebb and flow in the market. You can see that the pullback is it's not very deep, right, but you can see there is a pullback, okay? And when you identify a healthy trend, right, how usually most traders would trade is that one obvious way is to, trade the bounce off the moving average here. But then there are instances like, over here, price doesn't come to the moving average. Over here, it doesn't come quite close to the moving average. So what do? Do you still want to buy? Because if you buy, you might be buying when the price is, could still retrace deeper into the moving average. So there's some kind of, conflict in your mind. So what can you do about it? So this is where I want to introduce to you the trend line break, right? So this is useful technique, right? Whenever The market is in a healthy trend, but it just doesn't quite pull back to the moving average that you're looking at. So what now? What you can do is, again, draw a trend line, right? So you just draw a trend line on the retracement move this time around. You're drawing a trend line on this retracement move, all right? And you can enter when the price breaks and close above the trend line. That's an entry trigger for you to go short, right? This one, you might not enter this or even this one over here, because at this point in time, right, you do not know that this market is respecting the 50 MA or it's in an uptrend. So you would probably earliest, right, probably enter somewhere on this third or fourth break, all right? So over here, same concept. At this point in time, when you look back, right, price has bounced off once and twice. So the third time, again, price did come into this moving average, bounce off. But if you miss the move, right, you can enter on a break and close above the trend line. All right, get your stop loss right below this low somewhere about here. Okay, because the market could just come down lower, swing below the lows, triggering the cluster of stops and then continue higher. So usually, I give the trade more room, the stops more room to breathe and having it a distance away from this swing low. Similar for this, right? You can draw a trend line break, right? Break out, break and close above it, go long. Same for this. This one is not quite, there's no trend line. There's more of like horizontal resistance. This one is another one, right? Draw it, the trend line break, drawing the trend line across the retracement. Break and close above it, and you go long. Okay, so a simple technique, right? And again, stop loss, usually I recommend, right, putting it a distance below this swing low. Okay, so similar for this, right? This trade is in a healthy trend, but hey, what if the price doesn't come to the moving average? It doesn't give me an entry trigger to go short. Well, again, using the trend line break technique, right, you can see that this market, you can draw a trend line on the retracement, going short on the break and close below it, going short on the break and close below it, and going short on the break and close below it, having your stops, right, just a distance away from the swing high, and swing high. So one thing to share with you, a tip to share with you is that you don't want to draw your trend line too early. So what do I mean by that is that when you look back, right, say historically this trend line, let's assume that the retracement is usually about 15 candles, right? 15 candles, 15 candles. So let's say there is a new potential retracement occurring right now, okay? You don't want to, immediately look to draw a trend line as soon as possible, right? Because the retracement could take longer than expected. So for example, right, over here, 1, 2 candle, 3 candle, 4 candle. Some of you might be tempted to just draw a trend line over here at this point in time and trade the breakdown of this. And if you do, you can see that you do get stopped out. Okay, so how do you enhance or improve the odds of this trade? Number one, right, count the number of retracement candles that occurred previously. If historically the retracement is about 15 candles, right, I didn't count this, but I'm just saying, right, 15 candles, then this time around, right, you can expect again, right, about 10 to 20 candles as a retracement candle. So if the candle is only 3 or 4, then chances are, right, that the retracement would take longer to play out, and give it some estimate that it would retrace at least 10 candles, right, before you want to draw the trend line, before you trade the trend line break. So that's the first tip. The second tip that I want to share with you is that you notice, right, that the market tends to bounce or approach near the 50 MA, right? So again, if you want to trade off the trend line break, make sure that the price, right, is close, right, towards the 50 period moving average before you trade the trend line break. If not, right, you are entering your trades prematurely, and like this, right, you go short, market spike higher on this portion, you get stopped out. So these are two tips that would help you improve this trend line break trading technique, right? Hopefully, right, you take this into consideration. This is important, okay? So the trend line break, it looks easy on hindsight, but when you start to trade this in the live markets, you want to pay attention to the two techniques, the two tips I just shared with you, right? Calculate, right, the historical retracement, how many candles it is. And number two, right, you want to be trading the trend line break when the price has, approached near the moving average, okay? Moving on. Another technique, right? Okay, did I just share this? Yeah, seems like it. Trend line trailing stop loss. So you can also use, right, your trend line to write massive trends in the market, because if you think about this, a trend line is something like a moving average. It points to you the direction of the trend, identify for you an area of value, and you can also use it to trail your stop loss. So I'll share with you, I'll go into an advanced concept about trailing stop loss, but for now, the basic approach is this, right? Let's say that the market, it's in a downtrend. Let's say for whatever reason, right, you identify this swing low, market break lower, you go short. What you can do is that if you want to ride the trend, right, at this point in time, you could have already connect the highs of the trend line. This point here, here, and here. So what you can do is that trail your stop loss, or rather stay in this trade until the price breaks and close above this trend line over here, which happened over here. So only then do you exit the trade. And if you do this, right, for trend trading trades, you'll realize that from time to time, Not always, not always. Right? Every time when I share examples, right, which are cherry picked obviously to illustrate a point, traders think that it looks easy on hindsight, right? But in the real world of trading, it's difficult. I'm here to tell you, trading is pretty darn difficult, right? Live with it, embrace it. If you want something easy, don't stick to trading. The reason why I share cherry pick examples is because to illustrate my point. It's much easier for you to get the concept. Imagine if I share with you examples that go against the concept I'm teaching. Would you be able to swallow it? Okay, so this is the reason why, right? And I always want to, mention this disclaimer that, when in the real world of trading, things are much different. This is why I give you techniques and tips to pay attention to. I always tell you to, test it out yourself, try the technique, right? And, only you yourself, right, can find success in the market. I can't, force success down your throat. I can bring you to the door. But you yourself have to turn the doorknob and enter into the room. Okay, so anyway, back to where I was, right? Trendline trailing stop loss, all right? This is how you can actually trail your stop loss and ride trends in the market, right? This is how Trendline can help you. Now, I would say for stock traders, right, or traders who trade off daily time frames, right, I want to say that Trendline is also a very powerful technique, right, to protect your open profits. I would say this is very common in stock markets because, small cap stocks, they can just blast off like a rocket, right, quickly, right, and then it reverses back just as quickly and you lose all your open profits. So this technique that I'm going to share with you will help you protect your open profits, right? It's a bit of advanced technique, right? So anyway, again, it's things to do with Trendline. What you want to do is, again, draw your trend line as per normal, right? But however, when the market starts to go parabolic, when you notice the range of the candles, it's getting larger and larger. For example, this is a Bitcoin, okay? So you can see that over here, the range of these candles is getting larger and larger. You can actually draw new trend line. For example, the original trend line is here, okay? Then there's another one over here, then another one over here, and right now you can draw actually another one over here. So first clue is this: if your trend line is getting steeper and steeper, right, chances are the market is going parabolic. And you really want to protect your open profits, because when the market goes parabolic, it can just as easy swing back lower and you lose a lot of open profits. And if you don't want that to happen to you, pay attention. Second thing, right, if you notice the range of the candles getting larger, right, that is another sign that the market is going parabolic. So how do you protect yourself? How do you protect your open profits? Imagine, you buy the breakout over here, right? You're 10R in open profits, right? And draw the new trend line as the market gets wilder, right? You have no idea how wild the market can go. Maybe, go up another 50%, 100%, 500%. You do not know. So let the trend line be a guide, right? As long as the most recent trend line, the trend line is not broken, you can continue to hold the trade and exit only when the price breaks and close below the trend line that you have drawn. Okay, so this one will keep you in the move, the wild swings. You can still enjoy the upside, but at the same time, right, when the market shows signs of reversal, when it's showing signs of getting weaker, right, this is where you bail out of the trade. And this is where trend line, right, using a trailing stop loss with a trend line, right, will help you exit the trade and still protect a huge chunk of your open profits. Okay, so there is some element of subjectivity here, because you have to consistently, right, update your trend lines as the market makes a new swing, right? So this is where experience comes into play. But again, right, this is a powerful technique that you can use, right, to protect your open profits. So with that said, right, let's do a super quick recap, right, to what you have learned today. We have learned a ton, right? Number one, how to draw trend lines. Don't be a clown and draw so many lines on your chart where you don't even know where to trade. 3-step technique I shared with you. Number one, zoom out your charts. I have about 470 candles, as you've seen. Number two, draw the most obvious levels, right? If it's there, it's there. If it's not there, it's not there. Don't, just zoom in, zoom out, zoom in, zoom out, magnifying glass. Come on, right? It's there, it's there. You can tell. And the third thing, right, adjust your trend line. This is my own personal take. I like to adjust my trend line to get as many touches as possible, right? And as you've seen, right, you can even draw 2 parallel lines to define it as a zone. Okay, then we also talk about, before this, right, we spoke about trend line as a trend, right? You want to trade in the direction of the trend line, right? As explained earlier. We talk about the trend line bounce technique, right? A trend line, price comes into a trend line. If you comes into an area of support with a bullish reversal pattern, right, that is to me, it's a high probability trade, and you might want to trade that trend line bounce. Number two, we talk about the trend line break, right? In a healthy trend, when the market tends to bounce off the 50 MA, right? A break of the trend line would get you into the trade as well, especially if the market doesn't retrace deep enough and retest the moving average. And fourth thing we spoke about is the trailing stop loss, right? How you can actually use a trailing stop loss to ride massive trends in the market. And when the market goes parabolic, you want to protect your open profits, right? Adjust your new trend line accordingly, right? And if the price breaks the most recent trend line in a parabolic move, get out of the trade, right? You might miss a bit of profit potential. Maybe you might, go up another 20-30%. But I think it's more important to play good defensive and protect what you have instead of hoping, or rather when the market collapses 50-60% like Bitcoin and you pretty much are left with peanuts. That sucks worse. Okay, so that's another way you can use the trend line to protect your open profits and ride massive trends. So with that said, right, some of you might be thinking, hey, Rainer, wow, right, where can I learn more about this, right? So first thing, do me a favor. Hit the like button if you've enjoyed this video so far, the thumbs up, hit the like it, subscribe to my YouTube channel, and you'll always be updated whenever I publish a new video like this. Second thing, if you want to learn more about what I do, my website is tradingwithrainer.com. This is where all my best content, trading strategies, and techniques are hosted. It's all free over here. Just scroll down. Today we spoke about Trendline, right? So if you want to learn how price action trading can complement with Trendline, go and download this guide, Ultimate Guide to Price Action Trading. You'll learn how to better time your entries and exits, right? So just click this blue button, send it to your email for free. But if you want to learn more about trend following, riding trends, download the Ultimate Trend Following Guide, click this blue button, and again, I'll send it to your email for free. If you want both, just take both of them, right? It's for you anyway. Okay, so with that said, I've come towards the end of this video. Any comments, leave it below, right, the video, and I'll do my best to help. And again, if you've enjoyed this video, hit the like button, subscribe to my YouTube channel, and I'm with you, right, all the way. With that said, I'll talk to you soon.